Hey there, welcome to Tech World GBA, your go-to channel for all things tech. If you love staying updated with the latest in technology, gadgets, and tutorials, you're in the right place. The US stock market is highly sensitive to the political landscape, particularly during election periods. The 2024 presidential election will likely have a significant impact on the market, influenced by various factors, including policies of the candidates, potential shifts in Congress, and market sentiment. Here's a detailed explanation of how stocks might be affected during the 2024 US elections, along with reasons and predictions. Historically, stock market performance during US election years follows a few common trends. Volatility increases pre-election. Leading up to the election, uncertainty tends to cause market volatility. Investors may be unsure of future policies, tax regulations, and government spending priorities. This uncertainty leads to cautious behavior, with many investors reducing exposure to risky assets. Post-election rally, once the election results are known, uncertainty diminishes, and the market often experiences a relief rally, especially if the winning candidate is perceived to be market-friendly. 2024 prediction. Given the polarized political environment in the US, expect heightened volatility, particularly in sectors sensitive to regulatory changes like energy, technology, healthcare, and finance. The policies proposed by the candidates in 2024 will have a direct effect on specific sectors and the broader market. Here are the most critical policy issues and how they might affect the stock market. Tax policy, corporate taxes. A Democratic candidate may advocate for higher corporate taxes, potentially negatively impacting corporate earnings and stock prices, especially in large cap companies. Conversely, a Republican candidate may prioritize maintaining or reducing corporate taxes, which could boost profits and stock performance. Capital gains taxes. A potential increase in capital gains tax could disincentivize long-term investments in stocks, leading to more selling pressure before the election, if such a change seems likely. 2024 prediction. If there's a Democratic win, sectors that benefited from tax cuts, like tech and finance, may see short-term declines. Conversely, a Republican win could lead to a boost in sectors like industrials, energy, and banks due to potential tax benefits. Regulation, technology. Big tech companies are often scrutinized for antitrust concerns and data privacy. A more progressive candidate might push for stricter regulations, which could dampen the stock prices of tech giants like Apple, Google, and Facebook. Energy and environment. A Democratic win could mean more aggressive climate change policies, benefiting clean energy stocks like solar, wind, and EVs. In contrast, a Republican win could favor traditional energy sectors like oil and gas by easing regulations and boosting fossil fuel production. Healthcare proposals such as Medicare for all or more aggressive drug price regulations may cause fluctuations in healthcare and pharmaceutical stocks. A Republican victory may signal more favorable conditions for pharmaceutical companies and healthcare insurers. 2024 prediction. A progressive Democratic agenda could weigh on traditional energy and tech sectors, while boosting renewables and healthcare reform initiatives. A Republican win may maintain the status quo for fossil fuels and relieve pressure on big tech firms. Although the Federal Reserve operates independently, the relationship between the president and the Fed chair can influence monetary policy. Markets are sensitive to interest rate changes, inflation expectations, and stimulus packages. Inflation and interest rates. If inflation remains high going into 2024, the stance of each candidate on handling the economy will matter significantly. A candidate advocating for aggressive monetary tightening could spook markets, particularly growth stocks, while one favoring stimulus may boost the markets temporarily. 2024 prediction. The stock market may favor candidates who align with Fed policies that support controlled inflation and moderate interest rate hikes, thus maintaining economic stability. Foreign policy, trade and tariffs. Relations with key trading partners like China will be crucial. Under Trump's administration, tariffs led to disruptions in industries like manufacturing and agriculture. If a Republican candidate adopts a protectionist stance, companies reliant on global supply chains may face challenges. Conversely, a Democrat might pursue more open trade, benefiting multinational corporations. Defense spending. Defense stocks typically perform well when candidates support increased military spending. A Republican candidate often favors this, while a Democrat might seek to curb defense budgets to focus on social programs. 2024 prediction. Sectors like defense and manufacturing may see gains under a Republican administration, while technology and trade-reliant sectors may benefit from a Democratic victory favoring globalization. Sector specific predictions. Tech sector. Risks. Tech giants could face antitrust scrutiny and potential breakups under a progressive democratic agenda. Opportunities. Increased investment in digital infrastructure, AI, and green tech under democratic leadership could provide a boost. Healthcare. Risks. Major overhauls such as expanding public health care could hurt private insurers. Opportunities. Pharmaceutical companies could benefit from bipartisan support for pandemic preparedness and innovation, regardless of the candidate. Energy. Risks. Fossil fuel companies may face regulations and a shift to renewables under democratic leadership. Opportunities. Clean energy stocks, including solar, wind, and EV-related companies, could see significant growth if a Democrat wins and accelerates environmental policies. General market sentiment and predictions. Pre-election sell-offs. As uncertainty grows in the months leading up to the election, expect market sell-offs, particularly if polls indicate a tight race. Post-election rally. Once a winner is declared and policy directions are more certain, the market may experience a relief rally. This could be particularly true if the outcome supports market-friendly policies like corporate tax, stability, and friendly trade policies. Congressional influence. The 2024 elections will also affect Congress. A divided Congress, where one party controls the presidency and the other controls Congress, may lead to gridlock, which historically has been favorable for markets, as fewer significant policy changes occur, allowing companies to operate with more stability. Conclusion. The US stock market during the 2024 elections will be driven by a complex interaction of policy proposals, election outcomes, and global economic factors. Expect increased volatility due to uncertainty, but once the election results are confirmed, sectors sensitive to taxes, regulation, and trade could experience significant shifts. The following factors will be crucial in predicting stock market impacts. If inflation is under control by 2024, the market may respond more favorably to candidates prioritizing stability and economic growth. Sectors like clean energy, healthcare, reform, and defense, will be highly sensitive to the election results. Monetary policy alignment with fiscal policies will play a big role in shaping investor confidence post-election. Overall, investors should prepare for both short-term volatility and long-term sectoral opportunities based on the policies of the winning candidate and their administration. Don't forget to subscribe to the channel and hit the notification bell so you never miss out on any of our informative videos. And if you enjoyed this video, make sure to like, share, and leave a comment below. We'd love to hear from you.